Right, I'm doing a quick weekly recap. It is Sunday the 6th of June. I'm going to be looking at price action from the last week, the key moves that happened, why they happened, and how I could have caught them. And also, I will be looking at the week ahead and areas of interest to tech trades. So, we'll start on the higher time frame monthly candle. As we know, start of a new month, and gold was at a high. Monthly candle closed very strongly, just above a monthly key level, and going off price action, you would expect gold to at least test the highs of 2000 and maybe push on further. But with it being the start of a new month, there was a chance that we would get that weekly bottom wick. We did get that weekly bottom wick, and it rejected perfectly off a weekly level just here. I don't have my key levels for some reason because I switch computers and it's not saved them when I come back to the original one. So it did react perfectly to 1855 area and a weekly level. Strong area of interest, multiple rejections in the past. So the monthly candle was used as an opportunity to grab liquidity from buyers from the back end of May and take them out of positions, and also get a better demanded price to re-enter. So we did get that push back up, and at one point the weekly candle was, well, if you look at the daily, that's quite a strong aggressive daily candle. When we're going off how bullish gold has been, yeah, this is quite an aggressive bearish candle in recent price action, but it ends up kind of being similar. It might end up being quite similar to this one. That was quite aggressive, did engulf recent price action, a couple of 3-4 days worth. That daily candle did actually ended up engulfing a couple of weeks worth of price action. It did look quite aggressive. Like we said, we got the tap of the weekly level, and then we had a catalyst to push up and reject the majority of the bearish move on gold, which was the FOMC meeting. Powell was speaking, and he came out and said that they will not be changing the interest rates until 2022 at least, to support the economy and consumers like us, which is not good news for the actual valuation and strength of the dollar, because higher interest rates actually increase the value of the dollar, and that's something that economist, I don't think I'm saying that right, but that's what people look out for when looking to invest into currencies, because higher interest rates, although they're not good for us, consumer, they are good for central banks and governments, because banks are constantly swapping money between each other, and the interest rates are used to make money. So it is a money making scheme for the dollar, obviously, and it does strengthen it. It does not necessarily, they don't make that much from us consumers because of the absolute crazy money that's getting swapped around by the banks. It's not, that's the bigger issue. And obviously with the valuation of the dollar keep going down, that will put a negative effect on inflation as well, because the weaker buying power of the dollar, and that will also increase the export prices, import and export prices for the US. So yeah, it wasn't a good outlook for the dollar. It wasn't a good meeting. So that's what gave the strength on gold and the weakness on the dollar. If you go across on other USD pairs, you'll see the strength as well. It was 130 meeting, no bottom wick on the 30-minute candle. Imagine a few people would have had buy stops around Raja and stuff. I think they did. Just trying to catch the play. If the news was negative, that would have given you a lovely move, really nice move, correcting the majority. And we did have the clean candles to the left as well. Benson would call it fair value gap or liquidity void, ICT teachings. But people like market fluidity, they just call it clean candles to the left, clean traffic, clear traffic, should I say. Clear traffic to the left. So, yeah, that's what happened on gold. I haven't got my key levels at the minute, which is pretty annoying. I do trade off them. So, in terms of trade ideas, I need to get them back on. But just looking to the left there with clear traffic and stuff, it'd be nice to get a weekly candle down, a weekly wick down, and then a push above these sensitive price areas. Either here or here. Dead simple. Just moves, closures above area, whether it be on the 15-minute or 30-minute, and potential 1-minute entries, break and retest of these kind of levels, and the key levels which I'll have mapped out, I won't be doing on this short video. But yeah, my bias is obviously still bullish on gold. I'm only looking to take buys, and I do envision that we will be testing these highs and possibly going on further because of the weakness in the outlook on gold, and there's no news that there's no optimism for anything changing for the dollar at the minute. And I think that's what gave this push here, with Powell coming out and saying that things are staying the same. So if there was news that interest rates were going to increase, then that would give a lot more strength to the dollar, and then we could start looking at looking for corrective fares within gold, which is more like this here. If we started to hear of news of tapering all the stimulus and increasing interest rates and inflation going down, positive news for the dollar, like in this phase here, which it was, when we would start to see a corrective phase on gold, and we could well be at the minute in this area here, going off market history. This is where we could be right now in terms of where we're at in gold in current price action. So let's see if we fail to get above these areas, and then in the coming months we start to get that optimism for the USD, pandemic ending, countries getting back to normal, and safe havens like gold starting to see some profit taking, because there's a lot more risk appetite in the markets, and see more risk currencies strengthening. And if we was to get a corrective phase, then obviously there's a lot of pips to be had. As you can see here, plenty to go up. Oh shit. So the corrective phases, even though we are in uptrend, if you do have that fundamental bias, then there's still obviously definitely worth taking and catching those sells. So it's good to be aware of what could change the sentiment and just keeping an eye on that. And if we see the confirms and these just going off price action, these lows start to be broken, and we have the fundamental bias behind that as well, then we can catch themselves basically. So that's where I think we are in this move at the minute. So like I said, there's no reason to start selling gold until we get the confirms, and for now expect us to at least go and test these highs here. So still very bullish on gold as it stands. Right, on to GJ. Okay, I've got my key levels first, as you can see. Right. With GJ, we're getting that again. Looks like we're getting that monthly bottom wick still. Very strong close above this monthly level, which is good to see. And you would expect GJ to go and test these monthly candles highs at some point. With the price action last week, dog shit, weren't it, for GJ? Really poor. We did, but I would like to talk about this move here. It was suspected to be, like, if you go into Forex Factory, what day was it now? It was 27th of May. So this was last week, but there's nothing much to really talk about last week. Yeah, for me, that's pretty shit price action. I'm just not looking to sell GJ at the minute. Not really. You could have got some there for his clean traffic to the left, and you could have expected to maybe go and test these highs here, break and retest of the high it was consolidating on. But I was working and stuff, and the actual very choppy price action in it. It's quite messy, disgusting, really. You want clean, solid moves like these, ideally. If you're trading more time frames, then fucking roller coaster, that, innit? Very wicky and choppy. Not very good. Anyway, right, so then I want to talk about this move. So yeah, on the 27th of May, we had some fella I've never heard of, I can't pronounce his name. I'm just going to go back onto the date. What he said, basically, you can see it was it Thursday? One second. What was it? Fuck's it gone? Oh, in 2020. Fucking hell. So doing historical back testing that. Right, that's why I couldn't find it. There we go. Right. Oh yeah, by the way, Forex Factory is dead good for going back if you're back testing higher time frame moves, big catalyst, strong moves to the upside or downside. Then I'd recommend going onto Forex Factory and just back testing the dates and seeing what was going on around that time, because you will find there will be catalysts behind each move, fundamental reasons why you had them big moves. So going on to, here we are. So this fella here. So it was quite low impact news on Forex Factory, so it probably caught a lot of people by surprise, me included. But what he talked about is he gave the speculation for rising rates, interest rates in 2002 if the economy recovers. But the most important thing he said was the transition out of furlough, speculation of doing that, which would strengthen the pound. So that was the reason behind our eventual push out of this pennant, this wedge formation. Sorry, it's absolutely pretty shit price action we were stuck in. That was the fundamental reason behind it. Absolutely massive move, really strong move to the upside. But I do find I have been finding GJ quite tough to trade recently, because you are getting you're getting these fundamental catalysts. I think that was at market open, weren't it? Because of easing a lockdown, I think, or something. We had this market move there, so you're getting the majority of the moves like at weird times sometimes, like market open, you're just getting a massive push up. Once you get in these catalysts, these catalysts, you're just getting choppy price action in between it, and you sort of just got to ride it out and wait for these big moves. So I've got to be quite adaptive with that because it's something that's happening quite a lot now. So there's no excuses really. Eventually you got to adapt to these conditions and start catching these moves. But it's been tough with me working and stuff. I'm hoping when I get into the swing of things with working, I can keep a close eye on the charts. That's the idea. But I'm just new at the job, so I'm kind of pretty busy with it at the minute. So yeah, with GJ, in terms of moves I'll be looking for, get these key levels back now. So obviously I'm still very bullish on GJ as well. I'm only taking buys, so just get rid of all this. And again, I only want to be taking entries around the key levels really. So you see we had a perfect rejection of 155 flat level, and quite a close, very close to 154,800 rejection. And of course, like 1 or 2 pips away from it, so pretty much is a reaction to it. So it's literally 2 pips away from it. Reactions to previous highs. You'd be quite shelled though if you got in those buys. You're expecting to test the highs at least, and then just shots back down to entry. Just grabbing liquidity, aren't they? She's probably going to fuck around here a little bit. I would be, we do get that nice weekly bottom wick maybe, back down to 155, or even if it went down to, all the way down to 154,800, grab liquidity from there, failed to close below its previous high, that would be a strong indication for me that we're at the bottom of the consolidation area and we can try and start taking buys back up to the highs. So either rejections of 154,800 in there, or if not, nice weekly bottom wick throughout open and Asian, and then start taking buys above 155,200. Watching sensitive price areas to the left, and basically trying to fill this recent clear traffic, but obviously keep an eye out for this messy stuff as well. But the idea is that recent we could get a clean move to the upside with filling the clear traffic to the left in recent price action. That'd be nice. So yeah, that's what I'm looking for on GJ really. If we do get continued optimism for the pound and another catalyst above 155,800, which should give us another strong push to the upside, that's obviously something else I'll be looking out for as well, because we could range between 155,800 and 144,800 for a week or for we could continue to range up and down between it until we get that next catalyst move. But that's still a 100 pip range to play within, so still trades to be took. So yeah, that's pretty much everything.